Hello, hello, everyone. Jamie here. I hope you're doing well. Wherever you're watching me, say hello because this is live, unless you're watching me on the replay, in which case this is no longer live, but it was live at one point in time. So today is March 8th, 2023, and we are doing a discussion today, and it's been a little while since I've been live, but I've been putting a ton of content around S corporations on my YouTube channel. So if you don't follow me over there, just look for Jamie Troll, like and subscribe, or as my son would tell me to say, smash that like button. He wants to be a YouTuber. And definitely follow me over there. So wherever you're watching me, if you're watching me from YouTube, this is also streaming live onto my Facebook page. So make sure that you're also following me there. And it is streaming live into my Facebook group, Financial Literacy for Women Business Owners. So wherever you're watching me from, say hello, because I want to make sure that this is working. Let me know that the audio is working, that the video is working. I think they're on the right thing. I should have. Yep, I think we're good. But I don't see anybody commenting. I see y'all here. Say hi. Because today we're going to be talking about S Corps and specifically about some fact versus fiction. So if you've been watching any of my videos over on YouTube, you know we've been talking about all kinds of things as far as like what the difference is between an S Corp and an LLC or a sole proprietor. We've been talking about reasonable compensation and how to set that. We've been talking about how to calculate what your potential tax savings could be and the things that you want to make sure that you or your accountant who is calculating this are actually, keeping in mind when you do it. But the reason that I'm talking about this so much right now is because technically the deadline to elect for S Corp treatment for 2023 is March 15th. Now, you're not totally out of luck if you don't do it by next week, but I am yelling it from the rooftops because I know some people are going to accidentally miss the deadline. Again, there are things that you can do. You can do late elections, but the easiest thing is generally going to be to elect it by March 15th if you're thinking about it. Now, I am not a person, though, that is going to tell you S Corp is going to save all your problems, or, going to solve all your problems. You're going to save tons and tons and tons of money. That's some of the fact versus fiction that we're going to go over today and talk about who it could be right for and what to do to actually get a good read on whether it's right for you. And if you already are an S Corp, I get a lot of people asking me questions who already are an S Corp and want to make sure it's right for them and also want to make sure that they're following all of the rules. So we're going to talk about some fact versus fiction. Okay, good. I see some of you here. Make sure there should be a link in the comments above that will give you permission for StreamYard to see your name. So if you're watching me from the Facebook group, oftentimes it just shows up as Facebook user unless you click that button, even if you've done it before for some reason. It does this. I don't know. And tell me also when you introduce yourself, I'd love to know, are you an S Corp? Are you thinking about an S Corp? Where are you in this journey? Or are you just here because, this is information you want for the future? Where are you kind of in that S Corp journey? And I also want to pull up real quick a poll that we put recently into the Facebook group that gave some pretty interesting information. So I'm going to put up that poll so you can see the results. And we're going to talk through that was kind of the impetus for this live. So you guys are our inspiration very often when it comes to determining what we're going to talk about here. Okay, so this is essentially what the poll was. And I asked, when it comes to S Corp, where do you think you fall? What's your belief? So here's where, the vast majority of people said S Corp is best for businesses with a certain profit margin. And we're going to talk about that here in a minute and whether that's true or not. And the second majority of you said being an S Corp isn't worth it due to all the extra rules and regulations. So we're definitely going to talk about that. And third most popular answer is being an S Corp will always save you money on taxes. Okay, so let's chat about a few of these things. And again, this is kind of the impetus of why we're talking about this today. If you have questions, feel free to throw them in the chat because again, we're live. So you get to ask questions. That's the exciting part about it. Okay. All right. So the first kind of fact versus fiction with regards to S Corp elections. And remember, this is a tax election. You're not actually creating a new entity. The entity usually you can elect to be an S corp if you are an LLC, or you can elect to be taxed as an S corp if you are a C corporation. I typically speak to it from the standpoint of those who are an LLC, because that's most of the people in my sphere go that route, where they go LLC and then they end up electing S corp tax treatment. So that's just an important thing to remember. LLC is the legal entity. That's the legal, kind of entity that you have. And the S corp election is just to be taxed differently. Okay. So just to be taxed a little bit differently. Um, so a fact, first fact that is important to say is that an S corp can save you money on taxes. That is a fact. Okay. For the right people, I always have to caveat, for the right businesses. And that's not as easy to determine as we wish that it were, especially after the 2018 Tax Cuts and Jobs Act. It gets a little complicated, but for the right businesses, S corp can save you money. Why? Well, because a portion of your earnings as an S corp is not having payroll taxes assessed on it. So typically, if you're an LLC or sole proprietor, the entirety of your profit is getting assessed both self-employment taxes. Okay, that's 15.3%. That's Social Security and Medicare, and our favorite, income taxes, right? So you're gonna have income taxes on the federal level, potentially on the state level as well, depending on where you live. And so that is all of our earnings. When you're an S corp, you can divide it up into basically two buckets: reasonable salary, which you're going to have all those same taxes taken out of, and your additional profit, which you aren't going to have self-employment taxes, only income taxes. So again, it can save you 15.3% on a portion of your earnings. So yes, there are potential tax savings there that you want to be thinking about and be watching for when it might make sense for you to be diving in deeper and doing this analysis. Okay. So that is the first fact. What's the fiction? And I will tell you this, it never fails. I could probably dig up multiple threads that have happened in our Facebook group over the last several years that I've had this group. And it will be somebody coming in saying, hey, I need to save taxes. Or maybe they have a big tax bill coming up that they hadn't prepared for, which absolutely happens, right? And they're trying to find ways to save on taxes. And it never fails that by about the third or fourth comment, right, you're going to see somebody say, elect to be taxed as an S corp, or become an S corp, right? Or something like that. And a lot of people see it as this linchpin to being able to save all of this money on taxes. So the fiction part of this is that electing to be taxed as an S corp. Okay, notice sometimes I say becoming an S corp, but what I really mean is electing to be taxed as an S corp. That's just a mouthful to say. So, so becoming an S corp, the fiction is becoming an S corp will save you tens of thousands of dollars. Unfortunately, unless you are doing some things wrong, or maybe if you don't, it could potentially, if you don't work actively in your business, that's possible. But most of us who are doing this work and looking at electing S corp or not are actively working in our own businesses, right? And so therefore, the tax savings are kind of limited, and they're even more limited after 2018 because of that Tax Cuts and Jobs Act that went through, which was the intention of the Tax Cuts and Jobs Act as a whole was meant to simplify taxes. And yet in this specific area, at least, it made it a lot more complicated because it introduced something called the qualified business income deduction. QBI is what you might hear it referred to. We are not going to be talking all about QBI here because it is super complicated. A lot of accountants don't really get how it works. And there's a lot of phase outs and a lot of different factors for determining this deduction. But what you need to know is that it changed the way you can calculate this. So that's one of the other kind of fictions that I'm going to get to here too, is that it's an easy calculation to make, that you can just take, figure out, okay, I have this amount of profit. And if I put this amount, into reasonable salary and the rest goes to profit, and I multiply that piece times 15.3%, that's my tax savings as an S corp. Not true, because there is an impact on your, that may be your savings similar roundabout for your self-employment taxes. However, you have to think about the QBI deduction, which can actually increase your federal taxes. So while you might have your self-employment taxes come down, if your federal taxes come up by, an equal amount or more, right? Then what's the point? Most of us don't care where we pay our taxes to. We're looking at what's the end dollar amount that we are paying. Okay, so let me see. I'm just seeing what people are saying. So hey Amy's in my FFF class. I know that dog anywhere. LLC put tiptoeing into the land of S Corp. I think that is a great way to put it. I think that's true for a lot of people who are just kind of watching it. When I got to 30,000 net profit is when it made sense to me to elect S Corp. Okay, let's talk. I'm gonna jump ahead because I'm gonna go ahead and say I doubt that. I doubt that, unless you're not working actively in your business. So here's the other thing that came up in here, right? Is that most people, 42% of the people who answered this poll, this was just my informal poll. This is absolutely not like any kind of official study, but I think it's interesting to me to see what people say. But 42% said S Corp is best for businesses with a certain profit margin. And I think what you're really meaning there is with a certain profit, right? Profit margin is more the percentage, but we're talking about with a certain profit. And depending on the accountant that you talk to, okay, you're going to get all over the map with these rules of thumb. Okay. And so let's talk about this fiction. So this came from, back again, before when we could do kind of a back of the envelope calculation when it came to S Corps. And a lot of people would say maybe it's 50,000, maybe it's 60,000, maybe it's 70,000. You'll hear various different rules of thumb. Where do I think that these are helpful? Well, I think that these rules of thumb are helpful when they trigger you to take a look more, right? These rules of thumb are not helpful for saying at this point, it does definitely make sense for you to become an S Corp and you should elect it. Some accountants still do that. They'll just tell people without knowing anything about all the background of all the other financial information, right? Or doing any work on reasonable compensation or any kind of analysis into QBI. They'll just say, if you make over $50,000, you should elect S Corp. Don't listen to that. Do not listen to that. That may have kind of, sort of, but not even really worked pre-2018. It definitely doesn't work after 2018. And of course, it's always available for replay. It'll be in the group or on my YouTube channel. You can always find it. And here's the thing, $30,000, that's an exceedingly low. And here's the reason, because where tax savings come in with an S corporation, where potential tax savings come in, is when you get to the point where the reasonable salary, right? But I doubt it. So here's my thing, Greg. I'm gonna come on to accountants for a minute. And hopefully you're not using one of my preferred vendors because I doubt it. And I would say, show me the calculation. Show me the calculation that shows me that $30,000 in net profit will save me money as an S corporation. Show it to me. I want to see it, go over it line by line, show me. And I would ask the question, does this include the impact of QBI? What is my reasonable compensation in this business? And do you have support for that reasonable compensation that you have come up with for me, right? I would ask, are you factoring in the additional compliance costs that go to that accountant for filing those forms for you? Now you're going to have an 1120S. You're going to have to run payroll for yourself. There's a cost there, right? So I would find it extremely hard to believe. And this is, I soapbox, and Greg, you gave me an in to soapbox you a little bit because I can't I've done these calculations 6 ways to Sunday, and I can't in my brain, if you're actively working in your business, come up with a way that $30,000 in net profit is going to make sense for you to be an S Corp. I just can't. It might make your accountant more money. So unless you're not paying yourself a reasonable salary at all, which is playing with fire, in my opinion. Okay, so again, we can separate this into 2 buckets. So here's kind of to give you why I say this. Now, if you're working, like if you're paying yourself, $10,000. Let's see. Hang on. So remember, you have to set yourself up with a reasonable salary. That reasonable salary, which is what you would pay somebody else to do the work in your business. Okay, that's hard to determine. I have tools that can help you with that. If you are an S corporation, I recommend getting a reasonable compensation study done. I can give you can either get that. I have an S Corp toolbox that gives you education. I do recommend doing that and getting the getting the report as well. But if you just want the reasonable compensation study to show you what your reasonable comp should be, and this might be a good idea for you, Greg. It sounds like you make more now, but you want to be doing a study on your reasonable compensation. And this is something a lot of accountants will not provide you with. They'll just kind of rule of thumb you, or they will kind of put their hand up in the air and say, oh, I think this salary makes sense. Or they will do something like the 50-50 rule or the 60-40 rule, which are not actual rules and do not show up anywhere in the IRS guidance and will not actually protect you in case of an IRS audit. What you want to do instead is a reasonable compensation report. So I'm going to put this in here. I've partnered with a company that pulls all the salary data for you. So you can put in kind of all your different job duties, all the different hats that you wear in your business, because most of us wear several different hats. And here, copy. Let's see if this works. Most of us wear several different hats in our business, and it will pull all of that information from the Department of Labor statistics, all the information to determine what your reasonable salary should be. So here's the reason I say $30,000 in net profit. Now, maybe if that's after your reasonable compensation, that would make sense. Okay. But if you are total $30,000 in net profit before you pay yourself, okay, it's going to be hard to justify, especially if you work full-time in your business, that your reasonable salary is less than $30,000. So your tax savings only kick in to the point that your reasonable salary that you come up with based on all the jobs and duties you do in your business, and you average all that out, right? This study can help you do that. If you have profit above that, it's the profit above that that you don't have to pay those payroll taxes on. That's where that kicks in. $30,000, I mean, that's a fairly low wage. If you are working full-time in your business, it's going to be hard to justify that you could pay someone else to come do that work for $30,000 or less, right? It just is. And so if the IRS came in, you may be able to get away with it. This is, and I don't say you, Greg, I don't mean this to come down on you, but what I will say is a lot of business owners, and when I say get away with it, I'm not saying they're trying to do anything disingenuous. I'm just saying, if you set this up and you don't pay yourself a reasonable salary, or you pay yourself a really like $10,000 as a reasonable salary, right? Then you can get away with it until the IRS audits you. And then they're going to come in and they're going to say, okay, what's your support for the fact that you pay yourself $10,000 a year to work full time in your business? And how did you come up with that as a reasonable salary for yourself? Right? Because they know that that is a tax avoidance technique. That is a way to reduce the taxes you have to pay because you're taking more out in distributions, which have no payroll tax, instead of salary. They know. See, I don't understand. So is your total, if your reasonable salary, I paid myself more than reasonable to keep from getting in trouble. So do you mean your profit above reasonable salary was 30,000? That would make sense. But what I'm talking about is the trigger point, right? A lot of people have like a dollar amount that's the trigger point in profit. Say if my profit as an LLC or sole proprietor is X, then it makes sense to do this. So how can you pay yourself an $85,000 reasonable salary on a profit of $30,000, right? Like, it's not going to work. There's no tax savings there. So this is where my big thing, I love accountants. I love them. I am one. But, but we have got to. Okay, there we go. All right. That makes more sense. So $30,000, if your profit is that after, okay. Yes. So $30,000 profit before your reasonable salary, what that would not make sense. So I'm with you, Greg. But what I will say is a lot of people, I know someone that had a brand new business, like a side hustle, that they were doing some design work in my neighborhood for some people. They made like max $6,000 the first year they were in business. And I was trying to help them with their tax return, assuming they were a sole proprietor, maybe an LLC. They had set them up as an S corporation, their accountant, saying it was best for them. And I couldn't for the life of me. So then I was helping them figure out how they could, revoke that S election or create a new entity so that they wouldn't have to deal with that, because they were going to spend half of the money they made just dealing with the extra rules of being an S Corp and filing an extra tax return. They weren't on payroll. They had no idea. So I love accountants. But I love even more when business owners are empowered in the information that they need to make sure that the decision truly is best for them. And sometimes it's just asking those additional questions to make sure that you feel comfortable that all of that work was done the way it was supposed to be. And sometimes we just don't know what the questions are to ask, right? Like, who in the world would know, like, hey, I need to ask and make sure my accountant is including the QBI deduction in this determination? No one's going to know to ask that unless you're sitting here and you're in this group and you're watching my stuff and you're trying to make sure that you're informed as well about these types of things. Let's see. Yeah, and see, okay, so I'm going to come to you, Wendy, here in a minute, but that's the fiction that I want to say is it's not a specific level of once I get to this point, it makes sense, right? It's not like there's a trigger point. It is very highly dependent on your specific situation. Do you have other income, right? What are your deductions? And I don't even just mean deductions in your business. I mean deductions in your personal life. What is your personal tax situation? Is your spouse employed? If someone is truly doing a calculation to determine if S Corp is right for you, they should be asking those questions. If they're not actually doing the calculation. They are back of the enveloping it. They are, taking a number times 15.3% and saying, yep, you're good. It's going to save you X amount. See the calculation. Here's why this gets me. Okay, hang on. I'm going to put this up real quick. Some of you may have seen these types of ads. I'm on a rant this morning. You got me on a rant day, y'all. I know y'all love it. Oh, hang on. I got to stop the screen share real quick. Okay. So check this out. This is one of those ads that I got recently that some of you may also be getting these types of ads. Okay. Now I've blocked out who the company is, so some of you may know. If you just read this, it says making $60,000 or more in self-employed profit. Here's your recipe for up to $10,000 in tax savings. And it says up to, okay, but here it says 10K tax savings recipe, right? In the actual thing. And you'll see the little asterisk, always look for the asterisks, everybody, based on average member tax savings. But it doesn't say what. If you really dig into that, they actually have more information on their website in the like finest of fine print. That's like, basically tells you what they're really saying here is not that an S Corp, this sounds like you read this and you're like, oh, okay. So if I join this membership and make this S Corp election and have them do it for me, I'm going to save $10,000 in taxes if I make $60,000 or more in self-employment profit. Now, I know y'all are here, so you already know this, but like, it's like, send me, if you guys ever get these ads coming to you, or if you see things like this on like TikTok or whatever, send them to me, send them to my team's support@balancedcfo.com, because I love to collect these and I can give kind of my thoughts on them. This to me is extremely misleading advertising. Okay. This is somebody trying to sell a membership, which fine. But this makes it sound like if you make at least this membership is going to save you $10,000, and it's super easy and you're missing out. And it kind of plays into this like, oh my gosh, this S Corp election could do that. No, it can't. What they're really saying is just by doing bookkeeping, that's when you read the fine print, it's like, if you're not doing it, they're comparing this to people who are doing no bookkeeping at all, that are not taking any deductions on their taxes. They're just reporting their income and paying based on their income and taking no deductions, no business expenses whatsoever. They're saying, we can save you $10,000 because we're actually going to do bookkeeping that takes deductions for you. I mean, come on, y'all. So that's just where I get really fired up on this stuff, because there's so much misinformation out there and there's so much like glamorization. And sometimes I don't know if it's like talking about accountants, I don't think it's nefarious. Now, a lot of accountants do have an incentive to be recommending S Corp. Why? Because they make more money. They just do, right? Look at the cost of a business return and a personal return. And by the way, you have to do both if you're an S Corp. You have to do a business return, 1120S, which usually will run you about $800 or more, right? To do that in extra cost and payroll, and then all of those costs. Accountants make more money. Now, I still don't think it's nefarious necessarily. Sometimes they just don't even really know. Like, they're not really doing the full calculation because they don't even really know how to do it, especially after 2018. And that's why I've been yelling and screaming, because I want people to do this. And I want you to empower yourself with the information that you need to make sure, not to, like, it's kind of a trust but verify. Trust your accountant but verify. Make sure that there is a sense check there. Accountants don't get like, it's not like we get our CPA. And this is true for information I tell you too. Okay. Always check, trust but verify. Go verify wherever you want to. Maybe not Google. Google's a little questionable. But do your own research, right? Go out there and take a look and try to find out the information for yourself. Listen to multiple different trustworthy sources, right? But it's not like we get our CPA and then they just like bestow a crown upon us that has all the information loaded into it that we can download at any point in time, that's constantly changing along with the tax code, right? That's not actually how it works. We don't know the answer to all the things. The tax code is thousands upon thousands of pages. It changes all the time. We just don't always know. And so if it's not someone that's dealing with this all the time, they may still be using a rule of thumb to save time and because they think that it's appropriate, but they haven't necessarily done the digging to know that that rule of thumb doesn't work anymore. So how much can you save as an S Corp? Generally not tens of thousands. The most I could really see people saving is like 10 grand, which is not bad, not bad. A lot of people, it might be just a couple, like two, three, maybe $4,000, right? Still, again, you kind of weigh that against, does that make sense for the additional compliance, et cetera? So it's usually not going to be like this thing that's just makes a massive difference. If it is for you, if your accountant is telling you, again, that you're going to save 15, 20 grand plus just by making an S Corp election, ask them for the calculation, the full detailed calculation. Because I don't believe them. You don't have to say that. You can just say, oh, I'd really like to understand this better. Can you show me that? And the other thing that you can do is to, again, empower yourself. You can do this stuff yourself. You don't even need to talk to an accountant if you don't want to. So I created something, and you guys have probably seen emails about this. I want to just at least put this out here for those that are interested. This is my S Corp toolbox. I walk you through how to do the calculation yourself, the detailed calculation to determine how much you would save. And that's one part of it, right? That's one part of it. We also talk about reasonable compensation and how to estimate that. We talk about how to make the election yourself, right? So if you're sitting here on March 8th and you're like, there's no way in the next 7 days I'm going to be able to do this, you can do it in an hour or two. Like you can do everything in the S Corp toolbox, get yourself prepared, decide if S Corp is right for you, and make the election in probably like 2 hours. So that's why I want to put this out here. And it's an unbiased opinion. I don't have a dog in the fight of what I recommend for you. In fact, I'm not even recommending anything. I'm giving you the resources to do it yourself. Okay. To put in the information yourself and do it accurately. So this is really good for S Corp, people who are already S Corps that want to make sure that it's the right choice for them. Do this as well. And you can even go back to last year and see how much did I actually save last year as an S Corp. You can put your information in for last year and see that. So I really want you to go and check this out and see if this could work for you. But it's a really easy way to be able to do this work yourself, not have to pay hundreds and hundreds of dollars to an accountant to do a consult that you don't even necessarily trust. And then you have to do this work anyway, right? And even if you're not ready to do S Corp yet, this will help to determine that, okay, maybe I ran it this year and this year probably doesn't make sense, but you have those tools forever. So you can run it again next year and see if, okay, maybe next year is the time. So you know when it makes sense for your business. So I feel super strongly about this product, but really the purpose of this product was to empower business owners, to give you something, because I think a lot of business owners just feel like, how am I supposed to know? Like, how am I supposed to know if they're telling me the truth? How am I supposed to know if they're doing the full calculation? How am I supposed to know if this is really saving me money, right? And there are businesses out there that are literally run on false promises. And there are businesses out there that just aren't necessarily doing all the due diligence that they need to give you the full answer for your specific situation. So this was kind of my answer to that. And similarly, you can get, if you get the S Corp toolbox, we have an upgrade where you can save $100 and get your reasonable compensation study as well. That's best for those who are definitely electing S Corp this year or already are S Corps to have this reasonable compensation study. It is, kind of an IRS ironclad. If they come to audit you and say, hey, we don't agree with your reasonable salary, you can say, here is this report with charts and graphs and wage data and everything to support my position. And they'll be like, okay, because nobody gives them that. And so they're generally going to be like, great. All right. Well, check that box, and that's what you want. And so sometimes we don't do those steps because we're hoping we don't get audited. But, if you have reclassifications, and this is what the IRS does under audit, they can reclassify any distributions that you took out of your business as profit back to salary. And then you're all of a sudden going to have to not only pay those those payroll taxes you didn't pay before, but also there's going to be fines, penalties, late fees, all the fees that they can hit you with, they will. And I don't mean to say this in like a fiery way. I'm not trying to like fearmonger here. It's just real, right? Like we never know when we could be audited, so we might as well do things on the up and up from the get, right? Because it could be years from now when this happens. But if we have that support, that protection, we're good to go. It's almost like buying an insurance policy. That's kind of how I see it for your S Corp. Rather kind of get that done now and then have it than not and wish you did, right? Okay. So that's kind of my thought process on that. I didn't even get through all of mine because I got on a diatribe. Greg sent me on a diatribe. Okay, Greg, sorry for hating on your accountant. I understand now. I'm okay with it, I think. I'd still always ask them for the numbers though. I'd still always ask them for the numbers, and that's totally fine. People worry about like, oh, I don't want to like ask them, like I don't want to like bug them. No, ask them to see the numbers. They should be able to provide that for you. Okay, let me see if I missed anything else. Okay, here's the other big thing. Here's the other big fiction. And it came from, let me go back over to the poll here. This poll really was interesting to me. I didn't expect this one, but this one, our second biggest option that people said was being an S Corp isn't worth it due to all the extra rules and regulations. And what I'll say there is, this is going to be self-dependent, right? Like what is worth it to you? I just had a conversation with one of the people that bought the S Corp toolbox yesterday or was kind of going through their results. And they were like, I could save $2,000 to $3,000, but like, I don't think I'm going to do it right now. Right. But it's good to know because they had been told, a lot of people had said, you can save all this money. And when they actually ran the numbers themselves, it wasn't quite that. Now, that doesn't mean it can't be, right? Again, it can be large amounts, but for their specific situation, it wasn't as much savings as they had been told, right? And then they could make the decision of like, they felt like they were missing out by not doing S Corp this year. But now they're like, oh, you know what? I don't think that's really worth it for me to go through that and have to get set up on payroll and have to file an extra tax filing and, have to make sure that my balance sheet is correct for taxes, right? You might have extra bookkeeping costs, that kind of thing. So they were able to make that decision. But for some people, $2,000 to $3,000 in savings absolutely could be worth it. Right? Or $5,000 or $10,000. What is your amount? So the important thing to know is it's not like it's just not worth it. It absolutely can be. It depends on what your number is for worth it. So I would walk into it thinking like, what's my number for this being worth it? Right? And how can I hire someone to help me with this, that I'm getting tax savings, but I'm not having to deal with the compliance piece, that it's not bugging me that much, right? That you can get somebody to do that and you're still saving money. You have to think about like, okay, what's the trade-off here? How much would be worth it? I would say you can probably expect an additional increase of about $1,000 to $2,000 if you elect S Corp in compliance costs. Now that can vary, but that's what I would expect. So if the calculation tells you, okay, I could save $5,000 as an S Corp, then you can say, all right, minus let's say $2,000, I'd still save $3,000. Somebody else would be doing the work for me. Is that worth it? So I don't want anybody making the decision of like, just empower yourself with the information so that you can make the best decision for you and your business, and not either assume it's definitely worth it. Like, it's people with S Corps are either on the side of like, it's always worth it, it's definitely worth it. If you have insert random dollar threshold here, you'll save tons of money. Or they're like, not at all worth it, never going to do it, don't want to deal with it, right? There's a middle ground there where there's that cost benefit analysis. And I want to give you that information. And the problem is we usually can't do that ourselves because we don't have the information. We're just trusting someone else to give it to us, or we're just avoiding the decision entirely because we don't want to deal with it. But this is the best way to be able to do it. So here's the great thing, Amy, is that you don't have to backdate anything. I would start kind of as soon as possible because it's going to get backdated back to January 1st. So you'll be an S Corp for the full year. It will take multiple months for them to get back to you, but you can still, especially if you know that you filled in your EIN number correctly and all that kind of stuff, you can start operating as an S corporation already. So you don't have to wait to get that back to like start doing it. I would start getting yourself on payroll as soon as possible, just because otherwise, if you're taking kind of distributions instead to pay yourself, you might have to go back and do an annoying process to reclass those depending and stuff like that. It gets a little bit more complicated the later you wait. So I would go ahead and you don't have to backdate payroll. You don't have to like backdate it back to January. You can just take more either each month or take one big payment out in salary either now, or you can wait till the end of the year to take one big payment out in salary if you have the cash to do it. So it's up to you. There's not a specific time you have to do it though, right? So I would just get it going when you can and as soon as you can. But there's not, thankfully, a rule around that necessarily. You just need to pay yourself that reasonable salary throughout the full year. It doesn't have to be, X amount per month. Okay, so I had to do that this year. So I paid, my salary. I elected S Corp actually for 2022. And that's what I did. The first 3 months, I didn't pay salary. I did distributions, but then I did some pickup for each month after that, starting in April. Okay. Let me just really quickly go to Wendy's question. I am an S Corp. I set myself up on payroll for $30K at the end of 2022. Now my business has a loss of $8K. Do I need to change my election back to sole prop? Can I, since I now have payroll? So there is a way to revoke an S Corp election. You can only do it every so many years. So if S Corp is just not going to make sense for you in the future, then you might want to consider that. It's going to be hard to do it back to 2022 though. Ultimately, if you can't pay yourself, here's the question, I guess, Wendy. If you can't pay yourself your reasonable salary in any given year, what happens? Nothing. Unless, but you can't pay yourself any distributions. So with a loss of 8K, if you don't pay yourself any of that reasonable salary, and I don't know if that's before or after that 8K is before or after your salary, but you can't pay yourself any distributions until you've paid that full reasonable salary. Now, I don't mean that from a timing perspective of like you have to wait till the end of the year. It just means over the full year, if you haven't paid yourself that full reasonable salary, anything you pay in distributions will need to be reclassed to salary. Okay. So it just means like if your reasonable salary is $50,000 and you only pay yourself $30,000, but you took $10,000 in distributions, you can't do that. That $10,000 needs to be considered salary. Okay. So that's kind of how it works. So for you, so long as you didn't take distributions from your business, you're probably okay. But you will have to recoup any salary you didn't pay yourself in the following years before you can pay yourself those distributions. So this is something that is, we talk about this a little bit more within the S Corp toolbox as well, but like certain situations about what to do, right? What if I can't pay myself this? What do I do? That kind of thing. So it can get and in those situations, that could make sense to go talk to an accountant about. But again, you probably want to be empowered with the knowledge yourself to understand where are the S Corp savings coming in. Then you can ask better questions, right? It's always better. We're going to get more information when we know what questions to ask. And we know what questions to ask by empowering ourselves with the information and the tools to really understand, maybe not at the level that a CPA would. You don't need to get a degree in this, but you at least need to be generally aware of how it works, right? On a basic level. So that is why I recommend the S Corp toolbox. So jump in. Again, we even show you in the S Corp toolbox. Of course, it's easiest to go ahead and elect if you're going to do it this year by March 15th. But if you want to wait, you can't do it by then. We show you how to do a late election as well. So you don't have to pay an accountant to do that. You don't have to pay hundreds of dollars to get them to elect S Corp for you. You can do it all yourself. It's very easy. There's a certain form. We show you exactly how to fill it out. We try to make this really easy. Does it help to have an accountant when you are an S Corp? Yes. I'm not trying to take the place of anybody's accountant. I'm trying to empower you with the information to be able to have better conversations with your accountant. I do still recommend that you have somebody that you can ask about your specific situation. If you are an S Corp and somebody that's helping you make sure that you're meeting all those requirements ongoing, right? But again, it's going to help a lot if you know what they are ahead of time so that if your person isn't doing what they're supposed to be doing or whatever, right? So that is kind of my general rule in all of this. I don't want to be your accountant, but I want to help you have better conversations with your accountant. And I want to save you money on things that you don't need to pay somebody else to do. That's just my thought. Thanks, Crystal. You're on my team. You have to say that. I'm getting more. I feel like this year is the year of rants for me. Like I just have a lot of things that I want to say on certain topics, and I've held back a little bit. So stay tuned because I have things to say. And I feel like the more I do this business, the more I see things that I want to comment on. And I'm going to be doing more of that. So again, if you have anything that you see come across or you have questions, we're going to be doing a lot of financial fact checks and things coming up. I might be getting on TikTok soon, y'all. Just an FYI. I'm terrified, but you might be seeing me on TikTok, so keep an eye out. You guys are amazing. Let me know if you have any questions. As always, you can email us with questions on, anything on our products or anything like that. Support@balancecfo.com. We're here to help, and I'll talk to you soon. Bye for now.